Hey everyone, some time ago we discussed the small finance sector of India where we compared the top small finance bank including AU, Equitas, Ujjivan, Utkarsh, Suryoday and discussed key opportunities and challenges in this sector. Personally, I've been bullish on the long-term potential of small finance industry. However, every sector goes through the ups and downs that impact the share price of the companies within that sector. That's why today I want to discuss the reason behind 30% correction in Equitas Small Finance Bank. With this correction, Equitas is now trading at price to book of 1.75 and price to earning of 15. Then the follow-up question is, has Equitas share price bottomed out or there can be more pain ahead? But before we discuss further, please note that this video is only to share my knowledge on the latest development in the small finance sector and specific detail about Equitas. It's not a buy or sell call. Please do your research before investing your money. So if you look at Equitas share price journey, its IPO was at levels around 32 rupee in November 20 and it quickly doubled in the next 1 year. However, over the next 1 year, its share price fell down more than 40% and then share price jumped almost 3 times to touch peak of around 115 rupee during January 24. But since then, there is around 30% correction in Equitas share price. Actually, I was waiting for the latest con call to get a clear idea behind the correction. So Equitas has declared its Q1 FY25 results and its deposit stood at 37,524 crore. That has grown 35% year on year. So deposit growth has been very good. Then advances stood at 34,871 crore. That has grown 18% year on year. Now this has been a relatively weaker performance against their guidance of 25% growth in advances. But the good news is that management in the latest communication has mentioned that they should end the year at the guided levels of 25%. However, company's net profit for the quarter stood at just 26 crore and got tanked 86% year on year. And management has clearly mentioned the reason for the sharp fall in the net profit. It's due to one-time correction in their PCR ratio. PCR stands for provision coverage ratio. This PCR ratio was 55% and now it has increased to 70%. It was done by taking a floating provision of 180 crore. As per management, this was done basically because of the new guidelines that RBI has come out within the month of April for small finance bank to convert into universal bank, and the requirement is that the net NPA should be less than 1% and our net NPA of March was slightly over 1%. So we have done a one-time correction in our PCR to bring it down to less than 1% and also take PCR to a more reasonable level of about 70%. So this was a one-time action taken by management and one of the key reasons for fall in net profit along with all the return ratios for Equitas. From next quarter onwards, net profit should be back on track. However, apart from this one-time floating provision, there's another key challenge for the bank. Rather, this challenge is for the entire industry. There are high slippages in the microfinance loan segment of the bank. In Q1 of FY24, microfinance slippages were 35 crore, that has increased to 85 crore. Please note that microfinance has around 70% exposure in company's loan book, and this microfinance slippage is a key concern because this is not a one-off event due to some political issue or natural disaster. As per management, it is more fundamental to the industry. It's mainly due to over leveraging due to an increased number of lenders. That is the reason other microfinance companies are also struggling. Credit Access Grameen, the largest microfinance company in India, share price is corrected 27% from the peak. On top of this, Equitas management has refrained from giving any guidance on this microfinance slippages for the near term as they still need more clarity. Management mentioned that we hope that by the end of second quarter we should be able to come and give a better guidance for the credit cost for the full year. And this lack of near-term clarity for credit cost for the entire year is the key reason why Equitas share price has corrected so much. Because people in the near term do not want to take the risk. Also, since there are issues with the microfinance segment, Equitas want to reduce exposure in this segment. Microfinance loan growth has already fallen to 6% year on year in Q1. And since microfinance is a high margin business, fall in this segment would also impact the net interest margin for the bank and its overall profitability. That's another reason why Equitas share price has fallen. I hope you got a fair idea behind the correction in Equitas share price. Having said this, please note that microfinance is just 17% of Equitas' total portfolio. So yes, there is a pain, but its microfinance is only a small portion of Equitas' overall business. And management is quite confident to achieve 25% advance growth in FY25 despite challenges in microfinance segment. So overall, I believe that majority of bad news is already priced in and Equitas is already down 30%, trading at a price to book of 1.75. So valuation comfort is very much there. Having said this, Since there are still challenges with microfinance segment, Equitas Q2 number can also remain under stress and share price may remain under selling pressure. But hopefully it should recover in H2 of FY25. I still believe that fundamentally Equitas is a strong franchise and run by top leadership team. So overall, everything boils down to your investment horizon. For short term, it might not be a good idea, but such difficult situations create good opportunity for long-term investors. Having said this, it requires a lot of patience and courage to stick with your conviction. Now you can decide what is right approach for you. I explained everything that I am aware of the latest development in Equitas and the reason for correction in its share price. Thanks for watching this video. By the way, I also track more than 200 quarter results in the Excel tracker and discuss the results and valuation in my exclusive weekly video series that also include my own investment ideas and reason for investment. You can get the details from the pinned comment. And let me know if you want me to discuss any other company. I'll see you in the next video. Till then, take care.